Welcome everyone to the Crypto Rain channel. I have a special guest on with us today, Jonathan, CEO of Bumper. Now, if you haven't heard about Bumper yet, you're probably going to be hearing about it a lot coming soon. They haven't launched yet, which is the only reason you haven't heard of them. But I'm sure because of the problem that they solve, you'll be hearing a lot about them in the coming weeks. So with that said, I want to welcome on our special guest, Jonathan, CEO of Bumper. Jonathan, can you hear me okay?
Yeah, I can hear you fine, buddy. And, thanks for having me on the show.
Yeah, appreciate you giving some time. I know as you're leading up to your launch and everything, it gets super busy in these days. So we appreciate you making the space so my audience can hear more about Bumper. Now, for those, it's kind of a unique name, Bumper. I imagine there's a story behind it. And I've made some conclusions of probably why you named it that way. But would you share with us kind of what Bumper is and why you gave it the name you did?
Yeah, sure. Listen, the objective of Bumper is really pure and it's really simple. Its objective is to protect the price of your crypto asset. We wanted to remove that whole issue you have of waking up at 3 a.m. in the morning, grasping for your mobile phone so you can check the position of your portfolio, and at last use an instrument that gives you an absolute 100% guarantee that your asset is not going to drop below the floor that you've protected. And that's what Bumper does. And what we wanted to do is to make something which was really accessible and easy, because when you look at the options that are out there at the moment, like an options desk, they're really confusing, right? And they're really inaccessible. And the way we've designed Bumper from the outset was we wanted this to be really simple to use, right? And so the branding that comes with that and the name should be something that everyone just should feel comfortable, right? And Bumper for us has a kind of feel to it, which is just something that's friendly and easy to use.
Yeah, I like the name. It is fun, and fun goes a long way in this space, as people can attest with a doggy coin. So,
Yes. Yeah.
what's the function? Well, we can't really describe what the function is, but it's fun and it's for charity. It's like, anyway. So now, so it is like an insurance. Could you talk to us a little bit about how it works?
Yeah. So let me just kind of rewind a little bit. So back in beginning of last year, right, we were running a passive income fund called Index, which we've been running since like 2017, right? And we started to see the emergence of DeFi, right? And for me, this was the whole reason I got into crypto, right? A programmable money that was all automated in an ecosystem which was frictionless. This is exactly what I thought crypto was going to be, right? And we instantly saw that the emergence of DeFi was just an existential threat to our existing fund, right? Because it's just a superior way to kind of manage those kind of instruments and products. So we kind of down tools on Index and talked to our stakeholders and said that we want to kind of pivot into this new area because that is clearly, from my view, in the next 10 years where all the innovation and interest is going to be. And so it kind of presented with this really interesting carte blanche where you've got this kind of spark of a revolution, right? You've got this new ecosystem, which is trustless, it's permissionless, it's non-custodial, it's composable. It gives rise to all kinds of structured products and instruments that just can't exist in traditional finance. And we kind of thought, okay, well, this ecosystem can give rise to lots of solutions to problems that are out there that no one else has been able to solve up until now, right? And so we started thinking, okay, well, how can we use this? And let's start with the most difficult problem we can find and work our way down until we find a problem that DeFi can solve. And so we started at the top of the list with the holy grail of problems. Can DeFi solve for volatility? And we began this process that took us 9 months, coordinating some extremely smart people, university professors, postgrads in pure mathematics, the company that built and then delivered Haven, along with our kind of best minds from our side. And what we arrived at the end was Bumper, right, which we just think is a game changer. And it's really difficult to explain how it works. But what I'll do is I'll just start with a really simple childlike analogy that if you can follow this through, then you'll kind of get an understanding of its basic kind of mechanics.
Can I just make a note? Now, Haven rebranded as Synthetics. So many people that are tuning in that aren't from 3 years ago, they wouldn't know Haven except as Synthetics, which has been one of the biggest tokens that has taken off, and the first in the synthetic space. So they solved a really big problem. We're the first to solve it. Just some context on who it was that built Haven and how well that project is done. So appreciate your patience while I just gave some context for those that might not have been around.
Yeah, sure. And I have to kind of tip my hat really to Kane Warwick, the founder of Synthetics, right? And I think it's important to make the point that although we work with a company that delivered Haven, which fundamentally kind of solved a problem, Kane then evolved Haven into Synthetics, which is a totally different protocol, even though it uses some of the core principles that were designed. And I think Synthetics is one of the most kind of complex and beautiful pieces of technology out there. It is just, it's kind of high art as far as I'm concerned. But to kind of bring you back to Bumper, try and follow me on this analogy.
Yes. Okay.
Okay. Let's say you own a Bitcoin. You see the Bitcoin race up to $63,000. Okay. And you as an investor think, okay, that's a bit toppy. Got there quite quickly. I think it's going to retrace downwards. Okay. So you use something like Bumper to protect the price of your Bitcoin at say $60,000. Okay. Now the price, let's say in reality, the price then did come down. And as it comes down through that floor, that $60,000 floor that you've protected, your Bitcoin, when it passes through the floor, is swapped into stablecoin. Okay, so if Bitcoin continues to go down, you've got no downside risk at all because you can cash out the $60,000, you can buy the dip, or you can just keep your 60,000 floor. But likewise, if Bitcoin recovered and pushed above 60,000, then you'd be swapped back into Bitcoin again. So what that really simple analogy does is it gives you all the upside gain, but all the downside protection. Okay. Now the problem with that really lovely childlike analogy, right? It just doesn't work because of slippage, right? So especially when the asset is kind of oscillating along its floor, you're kind of trading in and out, maybe hundreds of times a minute. And we modeled this like 9 months ago using hourly, minute, second, and tick data, and you just get hit with intolerable amounts of gas fees, transaction fees, slippage costs, and it just wipes out your underlying principle. Now, what Bumper has achieved, and I think this really speaks to the key architect, Sam Brooks, who kind of led that design and scoping phase, who kind of had the breakthrough of just saying, we're not trying to solve a volatility with Bumper. What we're solving for is slippage. If we can fix that problem, then we can fix the volatility problem. And what is at the heart of the Bumper protocol is a near zero slippage engine, which allows us to swap people in and out without that kind of incumbent cost.
Mm-hmm. Fantastic. That's amazing. So in real terms, like the Bitcoin example you gave, because the downside of it goes to 63,000 is you might have this inkling that it's going to go down. So what many people do is when it hits 60, they do sell into cash, right? But if it hits 60 and then takes off, they miss out. Say they go to sleep and they miss out on the upside. So with Bumper, they can limit their downside risk as well as explore the full upside with a small cost to them for having purchased essentially like an insurance.
Yeah. So the beauty of Bumper, right, is it's this incredibly efficient market for dealing with risk, right? So the premium that people pay to kind of protect their asset is going to be as low as 3% per annum, right? So if you've got $1 million worth of Bitcoin, then you could be looking at just $30,000 over a year to protect the price of your Bitcoin holdings. And that premium is kind of daily floating. So as the asset that you're protecting becomes more volatile and it drops way below the floor that you're protecting, then your daily premium will kind of increase, not inordinately so, but enough for you to kind of be encouraged to close your position and kind of cash out. Yeah. But essentially what we've arrived at is this really efficient, flexible and accessible new innovative approach for dealing with risk. And what we kind of have in our release schedule is, we can obviously include this for retail investors. This can be plugged into other DeFi protocols. This can be used for professional crypto traders that have a fiduciary duty to kind of take a hedging position. And then in release 3, we're going to take on traditional finance and move into that world where traditional stocks and equities and derivatives can all be protected with what is this new way. Yeah, it's potentially trillions and trillions of dollars of assets that Bumper can protect.
Yes, I agreed there. When I was reading through the white paper on this, it was really in depth, and I appreciate you taking the time to explain it, because you've explained so simply what I had to try to understand reading through it a couple times, because the problem that you're solving is a complex problem, yet you just explained it in a pretty simple way. Now, tell us about the token itself, like the tokenomics behind it, and how does the token integrate with Bumper overall? Because you will be having a token sale. I don't know, is the date announced on that, or do you have an idea when the token sale is?
Yeah, let me put some context on that. So we came out of this 9-month scoping and design phase, right, in our bubble, right? We were just so in our own little kind of loop, and we then came out and we wanted to raise some cash in order to build this thing out. So we went to VC, hoping that with a few of them that we could raise $500,000. Within 3 weeks, we raised $11.3 million US and turned away 32 million. So that was an eye opener for us, that we realized that the market saw something in this that we hadn't quite realized, just how big this was going to be. So where we're currently at the moment, just to kind of give you an explanation of where we're kind of heading for development, is we have if you imagine the protocol split into 2 parts: people who want to take protection and people who want to make protection.
Yeah.
So takers will deposit something like ETH that they want to protect, and people who want to make protection will deposit a stable coin like USDC, and the takers pay a premium, the makers earn that premium, basically. So that's the kind of way it works. And on June the 22nd, we'll be releasing the first part, which is where makers can deposit USDC. And there'll be a lockup of 3 months for people who deposit that USDC. But if they do that, they will be receiving an allocation of bonus bump tokens, and a significant amount. We're going to be distributing about at least $6 million worth. And for those people who come in early around June the 22nd, their ROI is going to be around about 200%. So at the end of that 3-month period, they can pull out all their USDC and they'll have the same amount in bump tokens that they would have yielded for free. And then additionally on that, if you are a liquidity provider from the 22nd, then you will have exclusive access to our pre-sale. So only pre-sale will be offered to people who've deposited USDC into the protocol. And that pre-sale will be around about the end of August, which is when the protocol is going to go live.
Wow, that's amazing. Nobody's done it that way. At least not quite like that, but I've seen approaches similar to that. I love that type of approach. Is there any country restrictions, like China, US, any restrictions on who can participate?
No, we're not restricting this because it essentially is a token swap. So it is essentially a straightforward kind of DeFi protocol play. But what that does is it enables us to kind of bootstrap liquidity into the protocol before we go into launch. And then we'll have a public sale that will happen at the end of August, and where the majority of those funds will be deposited into the protocol to give it even more funds to kind of bootstrap it and get that flywheel. But to just to circle back to the question you asked, which is, what's the utility of the bump token? Okay, so consider us as very careful designers of protocols and designers of tokenomics. And we spent a lot of time and energy understanding all the different junctions in the protocol that we could force utility back onto that bump token and force value back onto that bump token. So to put that into context, if you want to interact with bump, you've got to deposit some bump tokens into the protocol. If you want to pay your premium, you can elect to pay your premium in bump tokens. If you receive a yield, you can elect to receive your yield in bump tokens. Every actor in the protocol will receive a daily distribution of bump tokens to reward them for interacting with the protocol. And we're just putting the final touches to a staking model, so you can stake your bump tokens into the protocol. That gives it extra robustness and security, and you'll receive obviously a yield from that. And then finally, the bump token itself is a governance token that, as we're moving across to a DAO, that'll become more important. So what we've done there is to ensure that there are a multiplex of use cases that people need to kind of acquire and use and deploy that bump token, which will push up the value we expect on markets. And then as I kind of alluded to before, as we move from retail investors, institutional investors, traditional finance investors, they're all going to be using that same bump token. So the value, we feel, is got a huge amount of growth, and we're targeting bump to be a top 3 DeFi protocol. That's where we think we can be within the next 12 months.
Yeah, I think you're solving a huge problem, and especially right now, it's fresh on everyone's mind after huge retracements, right? So some things retraced as much as 70, 72%. Bitcoin, 65,000 all the way down to 30,000. And people are thinking about, wow, if I just had that protected. And a lot of people expected a retracement, but that they didn't pull out because they didn't want to not be exposed to the upside risk. But then the downside hurt them. And, it's not like they're thinking, shoot, I'm going to sell. They're just thinking, man, I could have had so much more Bitcoin had
100%.
I cashed out. But now they have an option that they can explore both sides.
Well, this is the issue, right? A stop loss is a great kind of binary tool, right? But it's a one-way ticket, isn't it? Yeah. The market drops, you're out of the game. If it pumps again, that's it. You've lost out on that surge. And if you can if you combine that with the notion that there are bots that are kind of gaming you on that, they're trying to kind of trigger those stop losses and then kind of take the profits out, then it's just a kind of really inefficient tool. And then in traditional finance, they have an options desk, right, which are clunky, they're expensive, they're fixed expiry windows. They're certainly in DeFi, there's totally insufficient depth in the market to kind of give you the coverage that you want at the price you want. And what we have with Bumper is something which is inexpensive, it is flexible, and it is ultra efficient. And so we think that when you look at the incumbent tools in there in the marketplace that give you these kind of hedges against volatility, they're really poor. And Bumper, we think, it's that game changer that DeFi has just kind of given rise to.
So those that earn the premium, do you mind if I ask you more about that? Say somebody put 100,000 USDC up against for people to be able to protect themselves with. What kind of fees do they earn?
Yeah, that's a really good question. So again, I think we've been really innovative here in how we generate those returns. So if you deposit 100,000 USDC into the protocol, you've got to appreciate that we don't need to use that money until there's people who are redeeming their ETH, right? That they kind of want to withdraw some of that USDC from. So what we can do is we can deploy that USDC to wash its face, generate an income from other DeFi protocols, such as kind of a Yearnvol or an Aave lending site. And so we can generate whatever returns that we can get that's best in the market, say a kind of 10, 15, 20% kind of stable coin yield. We can generate that, distribute that to the person who's deposited the USDC, and then on top of that, we can distribute the premiums that protection takers are paying on top. So you'll get two benefits, two yields. And so that's why we think we can beat the market.
That is amazing.
And then even kind of another layer on top of that, and I think this is where it gets really clever, is that when you deposit USDC into the protocol, what we do is we return back to you bumpered USDC. Okay, so that's just a representation of your USDC. Now you can go off and you can trade that. You can deploy that into other protocols. But essentially, when you want to redeem your USDC and take it out the protocol, you've got to return that BUSDC back into the protocol. And the same thing happens on the ETH side. So if you've got ETH you want to protect, you send that to the protocol, say $100,000 worth of ETH. The premiums will be taken out of the ETH as you go along. But what's returned back to you is bumpered ETH. And so just imagine this, you've got bumpered ETH, and let's say you bumpered it at $4,000. Your ETH will follow the price of ETH up as high as it will go, but your ETH will never drop below $4,000. Now that means if you want to use that to say collateralize a debt position using Aave, you'll know you're never going to get liquidated. And you don't have to over collateralize as much because this isn't a volatile asset anymore. It's protected and bumpered.
Wow. I can see how this is all coming together. And in fairness, I took your paper to somebody that understands DeFi really, really well. and I had him read it, and he's an advisor on a top tier project, and I trust his opinion on these things. And he went through, and he said, "This is mind blowing." He said, "You got to have these guys on your channel. What they're doing, nobody's done." And he's really deep into the different layers that DeFi can provide. Yeah, what you've done here is amazing.
Thanks, man. I really appreciate that. And I think, you know, from that simple kernel of an idea that we had, it's really nice to kind of, you know, give rise to an instrument that, you know, even ourselves, we're trying to kind of work out, well, how far can this go, right? Because you could take a tokenized traditional equity like Tesla, you could bumper that. You could take tokenized fractional ownership of a property and tokenize and bumper that. So, and we haven't even started to kind of think about how that might work with kind of various derivatives that are on the market, which is a huge market cap. So I think for us, we're just trying to work out, you know, where the use cases are, and obviously as the market expands and DeFi utility expands, what we're trying to do, and I think this is the kind of key point that I really want to communicate, right, is that when you really understand fundamentally under the hood how Bumper works, right, then you'll understand that the higher the TVL of Bumper and the higher the token price of the Bump token goes higher, then by design, the Bumper protocol becomes more secure and it becomes more efficient. So essentially, for us, this is a land grab, right? We're the first people to crack this. That's why we're racing so fast to market with an engineering team of 19 that are coding absolutely every day. And if we can get there first and we can build our TVL up price first and get it to a higher point, then Bumper just becomes the de facto protocol you use to protect the price of your asset. So that's the execution game for us.
You gave it a great name that can totally be used, that they can say, "Hey, did you bumper it?"
Yeah,
Love
for
it.
sure.
Yeah, the marketing side of me, you know, from business school comes to mind. You know, people don't say tissue paper in the States where I went to university. They don't say tissue paper; they say Kleenex, right? Hey, hey, did you bumper it? Hey, we might go through some downside risk. Love it. Now, could you tell us a little bit about the team that you've put together to take this to the vision that you have for it?
Yeah, sure. So internally, it's me and my co-founder, Gareth Ward, who we both started Index back in 2017. So that kind of key part of the management structure was joined by Block 8, who when we took this to them, because we needed their engineering skill to kind of build this out, right? They fully committed to us. So they took a 10% equity stake in Index.
Yeah.
And we have worked absolutely collaboratively on this project to the point where their CTO has moved seamlessly across to become the Bumper CTO. So this is Sam Brooks, who is the key architect and the brains really that has kind of led that slippage solving engine. On top of that, we have our CMO, who currently or previously built out his own digital agency in London, and so I think between those kind of key players, we have, you know, the kind of key minds of the management structure that are going to kind of lead this project over the next kind of 3 to 5 years.
You've really set this up well, and as you said before, DeFi is where a lot of the innovation is going, and it attracts some of the brightest minds. And yeah, I can see why your team is attracting some of the best, right? And some of the best minds to come over and work with you, because your product is needed for anybody who understands this space.
Yeah,
Cool.
for sure. It's interesting what you say about that, because, you know, when you kind of talk to university professors or kind of graduates with pure mathematics, this is a protocol that really gets their mind kind of turning and their curiosity, right? And they are very, very keen to kind of get involved. So it's been really a pleasure to kind of have those kind of super clever people on board.
Yeah, because the problem you're solving, being the first to solve it, you can attract the very best minds. Anybody who understands what it is you're trying to do says, wow, there's a need for this, and your solution is amazing. So it's not surprising that you're able to attract Haven to help put this together as well.
Well, Block 8, it was Block 8 that we attracted, who built Haven, yeah.
Blockade that built Haven, yeah. When I was reading through it, and I was like, wow, you know, anyway, I knew Haven and remembered following them and how Synthetics did. So I looked at that and I was like, wow, the same people that designed that because I followed synthetic since the early days. So
Cool.
all right. Well, Jonathan, we very much appreciate your time and thank you for joining us. I think this will inform a lot of my viewers on what's going on with Bumper. And thank you for breaking it down so simply and elegantly so that the complexity of it, they don't have to understand all the complexity. They can just understand what it is it's accomplishing and without having to know all the specifics. So thank you, Jonathan. Appreciate your time very much.
Pleasure, buddy. Thanks, man.
All right.
Success is falling, flowing like rain. The timing's right, we're getting paid. Come on, rainmakers, let's make this happen. Let all the haters do their thing. There's no other like crypto rain. Analysis solid with reviews so good. Say goodbye to the haters and welcome rainmakers. Success is falling, flowing like rain. The timing's right, we're getting paid. Come on, rainmakers, let's make this happen. Let all the haters do their thing. There's no other like crypto rain. Analysis solid with reviews so good. Say goodbye to the haters and welcome rainmakers. Success is falling, flowing like rain. The timing's right, we're getting paid. Come on, rainmakers, let's make this happen.